I'm curious, Adam, what's the biggest objection or the biggest challenge that you have to help people overcome when it comes to using a donor advised fund to their tax advantage?
Well, the thing that people don't like about the donor advised fund the most is actually one of the features that is tied directly to its tax benefit, which is the fact that when you put money into a donor advised fund, you can't withdraw it. Right? This isn't like a retirement account. There's no 10% penalty. Money you put aside for charity, and you take that tax deduction for giving money to charity, that money is put aside permanently as far as the government's concerned, right? You are giving that asset to the donor advised fund, which means you can only use it for charity. And what I tell people is I say, listen, don't put so much money in a donor advised fund that you might need it for something else, etc. If you're like most people, you have a philosophy about giving. I know a lot of people who give 1% of what they make every year to charity, 2%. And of course, there's some people who give even 10%. But whatever that number is that you give to charity, most people give that number almost every year. Maybe they give a little bit more in good years, maybe a little less when times are tough, but they roughly know what they give to charity every year. By the way, it probably is on your tax return for the last number of years. Just take that number, multiply it by 10. And in good years, that's a great way to kind of make sure that you put the right of money aside in a donor advised fund for charity, get the tax benefit, but actually only put aside money that you were going to give to charity anyway. This is just a better way to do it.
Interesting. Okay, so yeah, I'll make sure I caught that because I think I caught it. My listeners may or may not have. So if I normally give $100,000 to charity every single year, what you're saying is, hey, set aside something that's highly appreciated, such as stock would be an easier way to do it because you can sell pieces of it. Or if it's real estate, you got to sell the whole thing, right? So if you have a $5 million asset, it may or may not be a great thing for a donor advised fund because it has to be 100%. But if it's stock, you can sell shares of up to $100,000 in that same year, Adam, right? And not only you're going to get the ability to give, just like you would have give 100,000 of your income, but that would be post-tax. But you're also going to get the charitable deduction off of your other amount. Did I catch that right?
Yeah, you've got it right. That's exactly right. And actually, by the way, donor advised funds scale to amazing sizes. There are donor advised funds that are in the billions. I've actually talked to someone who had a donor advised fund of over $300 million funded by real estate. So it really comes down to how much you give to charity every year and where you are in your career. And as some people would say, your philanthropic journey in terms of where you want your wealth to go as you age. But fundamentally, yes, you want to fund that account. If you have a lot of appreciated assets, stock, real estate, crypto, and you are the type of person who gives $100,000 a year to charity, fantastic. Love that you are that generous. You don't have to just put $100,000 into this account. You can say, well, I'm going to give that much or more over the next 10 years. You put aside $1 million in stock, avoid that capital gain. And now that $1 million is compounding tax-free every year in a diversified portfolio. And you can give that money to charity anytime, right? You want to give money to your university? Fantastic. If you want to give it to your kid's school, great. Your church, your synagogue, wonderful. Whatever cause you want to give to whatever organization, you can give it to out of the donor advised fund. But the real advantage is you have control with a donor advised fund of when you take that deduction. It doesn't have to be the year or the day that you give it to the end receiving organization. It's just when you put it in the donor advised fund.
Okay, so I think I'm bringing it all together now.
Yeah.
So I say, hey, I got $1 million of stocks, appreciate it. And I decided to put it in 2022. Let's say I put it in there, right? But in 2023, I have a low income year or I retire from that big company that I just sold, right? Or whatever, right? And it's not necessarily advantageous for me to take the deduction in 2023 or 2022, right? But let's say 2025, whatever, I have a huge year and everything's going great. I have a huge taxable event income-wise. I could basically tap into that million that I had given previously a couple of years back.
Oh, no. I sorry. I want to make sure that this is right.
Okay.
It's the other way around, right? So the way it works is that you have a good year, right? You're selling your business, you're selling off a large position, stock, etc. That's going to be an expensive year. So 2022, that could have been your expensive year. Maybe you sold a bunch of assets. You're going to owe a big tax bill that year, but it doesn't have to be that way because instead of selling all of your assets, you could sell 90% of your assets and contribute 10% of them to a donor advised fund. lower tax bill because you never pay the capital gains on that 10%.
Mm-hmm.
And now that 10% is invested. And so the version of what you said that is 100% correct is that in 2025, when it comes time for you to give to charity, right, and you want to give and you have the assets, et cetera, instead of giving that out of your income, instead of giving that out of your bank account, you have this donor advised fund set up and you can give the money there. It's already set aside for charity.
Mm-hmm.
And so the only issue, to be honest, the donor advised fund is such an amazing deal. The only issue is that most of the incumbent providers, most of the large providers in this space, the Fidelities, the Schwabs, even Vanguard, charge relatively obscene fees for their donor advised funds. They charge easily. Vanguard, which is well known for being one of the most inexpensive financial providers in the world, charges 60 basis points, 0.6% for their donor advised fund, right? You know, if you put aside $1 million, you are going to be paying thousands of dollars in fees every year for this donor advised fund. And to be honest, it's worth it given the tax benefits. But of course, that's why Daffy is here. We use modern technology, brand new stack. We're available on iOS and the web, and we charge a flat rate. Our highest tier of service is just $20 a month.